Hello, this is Brian Rezny, president of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Well, as probably a lot of you have noticed, we've had a little bit of volatility the last 2 or 3 weeks. Nothing outrageous, but again, nobody ever wants to see their money go down even temporarily. We've had a few, and I'm talking 1 or 2 calls or emails from existing clients out of hundreds of clients that are maybe concerned, and they've asked the question, well, do you think we should sell and then wait till things come back up? Absolutely not. Short-term market timing in and out has been proven to be a disaster for your returns and your portfolio. There's no way to get away from inter-year volatility, which occurs all the time. Not only in the stock market, but also the bond market. Real estate, gold, oil, all assets have inter-year volatility. It doesn't mean you physically lost money. It means you're not at your high point. You might be down 4 or 5%, but at the end of the day, what's the macro, the big part of the economy look like? It's growing. Corrections, short-term corrections are very, very normal. In fact, we had one in February, which most of you probably don't remember, where actually the market came down about 10%. It recouped that and basically went up to new high ground, and then we've retracted again. So we might have a year where the market's just doing this, and we may end up at the year at a flat line or down 1 or 2%, or we may have a year-end rally, which is often the case in November, December, and we might be up 8 or 10% by year-end. This is normal. I always encourage every investor, don't worry about the next 12 months. Worry about the next 5-year average. That's what really makes a difference. Investors often are their own worst enemy with emotion. Often investors want to ramp up risk when things are rosy, and they want to decrease risk when things are a little bit volatile. We see no signs of recession at all. There's a few little indicators we do look at that give us a little bit of a warning sign that, of course, we're looking at closely, but nothing is showing a sign of recession. Remember, a slight slowdown in the economy is not a recession or the growth rate of GDP. Generally speaking, we're seeing an upward trend for GDP and the U.S. economy. You're going to have short-term volatility. No more, no less than what we've seen in the last 40, 50, 60 years. Again, the problem that most investors face today is the media. Every single day, if you're on your computer, you're seeing propaganda about the market up and down or this and that. If you watch the news, it's the same thing. You are being spoon-fed 24/7, hyped up commentary that basically gets a lot of investors emotionally nervous. And again, I understand that. So if you do have a question, give me a call. Schedule a review appointment. Let's sit down and discuss. Now, I will tell you, we're looking at the economy closely. If we see signs of a real rollover of the economy and recession, we'll start to get more defensive, but we're not seeing that yet. If we do, we will make adjustments. By the way, take a look at the 10-year Treasury, the 30-year Treasury. These are down 6 to 12% year-to-date negative, when the market is basically flattish or down a little bit year-to-date. So ask yourself this, would you rather have been in a whole bunch of bonds that are negative year-to-date, 6 to 12%, or would you rather be down 1 or 2% or up 1 or 2% and have a similar volatility probably that we've seen in the bond market this year? Remember, there's no way to get away from volatility. You can bring it down slightly, bring it down your risk profile, but again, then you're giving up your long-term returns. On one hand, you have a little less volatility. On the other hand, you make a lot less money over the next 5 or 10 years, in our opinion. You have to decide that as an investor. But again, if you're concerned, call our office. That is what we are here for. Of course, as always, we appreciate your business and we appreciate your referrals. Make sure you watch our TV shows this weekend and my live radio show. I'll be talking a lot about the economy, the investment markets, and taking a lot of questions from TV and radio show listeners alike. Make sure you have yourself a safe and profitable day.